Hi everyone and welcome. Today we have Remco Westermann here with us, CEO of MGI. Welcome Remco.
Thank you, Anton.
So yesterday you had your Q2 earnings release. Could you be so kind and summarize it for us?
Yes, we had yesterday our Capital Markets Day where we presented our numbers and we also sent, of course, the press release out. We're pretty happy with our results, even though if you look backward, it's, let's say, from a growth perspective, a lot less than we have done the last years, but it has a lot to do with the market. Our revenues went down by 2% versus the same quarter last year. If you take out foreign exchange effects and business that we stopped, it was a growth of 2%, and a growth of 3% and 1% organic growth. And yeah, what we did was gaining market share, because I probably need to explain a bit why I say this is good numbers while they are basically flat. No, it's the market is advertising market is very much in line with the economic situation, and we have at the moment macroeconomic headwinds, and that means that the first thing where a company saves is on its marketing budget, so spending less marketing dollars, euros, and then also when less money is spent, we do everything electronically via exchange, so it's a bidding mechanism. So if there is less people that have demand, it's like on a stock exchange, of course the prices go down. So we are working with in the current market with CPMs, which is the indicator for the pricing, with the 20 to 25% lower CPMs, so prices, and less demand. So that means if you have that, you have to compensate that. So basically a flat result is very nice because you gain market share, you do more volume. And that's what we see in our customers. We have 9% more large customers compared to last year, and a 13% more ad impressions, which means also that we have increased our revenue share. So yeah, flat in euros, but looking a little bit deeper, really happy that we were able to gain market share.
Yeah, so a tough market environment. You also decided to lower the guidance for this year. Could you briefly tell us sort of what was the background or what led you now to lower it?
Yeah, same reason, macroeconomy. And when we did the guidance, people were, and also ourselves, we were much more positive about the second half of the year. In the press, everybody was expecting also to things going up. It looks like from today at least that that's not going to happen this year, maybe towards the end of the year. But as we are careful and want to be careful and don't want to have to reduce it then shortly before the numbers come, we say, okay, let's really prepare for a continuous not great environment, which means we continue to be flat versus last year, and however hope that the recovery comes earlier, and then happy to change it again. But at the moment, from today's view, we have to guide a bit more careful.
Okay.
The good thing is at the moment the advertising spend goes up again. We will see the CPMs go up, so we immediately see also revenue increases, and what we do now on less growth, we will see then as a bit more growth.
Yeah, so you also alluded to this managing to increase your market share. So we also had the Pixelate report that came out this quarter regarding mobile SSPs. And not only did you sort of retain your market leading position on Android, but you now also claim the top spot on Apple devices.
Yeah.
What was it that led sort of to this increase on iOS?
Yeah, it's a combination of things. One of them is that Apple has had big changes with IDV, the identifier. And a lot of traffic on Apple is now without an identifier. And we are really strong in contextual marketing, so marketing without identifiers. So that helped us gain market share. And for the rest, also connecting more customers and doing altogether more volume there. And yeah, really happy about the position. So we're the number one on Android and iOS in the US. And also our European position is great. So it's going forward.
Yeah. So also yesterday during the Capital Markets Day, there was a lot of talk about this sort of the new future without identifiers. So going forward, we might not have IDFA, we might not have third-party cookies. So how prepared is MGI for this?
Yeah, maybe let me elaborate a little bit on what's happening first, before I talk about what we do. Identifiers are indeed starting to disappear. And it started basically with too many cookies, too much information. And it's, let's say, we got GDPR, where people also, let's say government, were also saying we need privacy, better privacy control. And with GDPR also, let's say some bigger companies, Apple, Google, etc., were looking at their own stacks and saying, okay, let's not give out so much information anymore. If that's only privacy related, we can argue because it also helps them to make a lot more money. But basically we see it with Apple that deprecated its identifier. Some web browsers already have stopped with cookies. Google has now announced, or has announced a few months ago, that they will also stop their cookie from middle of next year onwards. And also on their mobile, and the identifier will disappear after that. So that means without an identifier, it's much more difficult to target somebody, because if I have an identifier, I can make a profile and can see if this person is interested in cars, in whatever other things, and then target also the right ads to this person. If I don't have this identifier, there's no profile, and I need to look at other ways to target. And then you could talk about contextual, which is really looking at the pages the person goes. And as it's mostly new pages that people go, you need to index those very fast. So we have a lot of technology for that. And that comes to our position there. We know this coming, and we also see this as an absolute opportunity for MGI, because MGI, I mean, in this kind of disruption phases, you can gain market shares. And as a result of that, we have been organically investing a lot in it, but also acquired a Finnish company, Beamray, which is now the product now is called Moments.ai, which is really a contextual targeting product. And we also developed Atom, anonymous targeting on mobile device, where also no privacy signals are leaving the device, which also gives us a very nice position in that market. As targeting with identifiers still is possible in certain fields, the big move in the market hasn't come, but we will see that coming in the coming years.
Yeah, exciting times. So you disclosed yesterday that customers are already using Moments.ai and Atom, sort of running parallel campaigns. How has the feedback been with these new alternative targeting solutions?
Yeah, very positive.
Yeah.
And we see really also extremely good results, partly in the range of, or even better than with IDs. Because also cookies, there's so many cookies around that also cookie is not always that reliable. So no, we see really, really top results, and we have still potential to further improve the solutions that we offer.
Yeah. Would it be fair to say that these solutions are sort of a key part of the future strategy in gaining even more market share?
Yes. If I look at the company, we are an, let's say, vertical multi-channel ad software platform, which has a very strong basis also in games. The games give us a lot of data, allow us to test our software, our products, our advertising products, and of course we have also a lot of ad spaces in those games. So that's a very strong, and that's where we started as a company. And we started the advertising part to support the gaming part, but we have found out there's so much demand also for this advertising part that that's where now the majority of the revenues are, and where we also grow fastest, except at the current market, of course, but talking about revenue share, about market share. And with the ad segment where we have a very strong position, as you already noticed before, or said, in the in-app part. We are strongly growing on CTV, connected TV. A lot of traditional TV is moving to connected TV. And we are very strong on the data side, data with identifiers, but also the contextual ones. And we're further working on the verticalization. So letting advertisers work directly with publishers via our platform, because there's currently so many parties that people partly work with that it's super inefficient and super intransparent. So those are things, and then of course privacy, transparency as things that we are generally advocating.
Yeah. During the summer, there was an article in Ad Exchanger which mentioned that the MGA was taking part in negotiations to perhaps acquire MediaMath. Eventually, this didn't lead anywhere. Can you comment on this?
Yeah, we are a company that did a lot of M&A in the past, and is also currently looking at M&A possibilities. We are very, very strong on the supply side. So we have a vertical platform, we have demand things, but we would like to get a bit more critical mass on the demand side. MediaMath is one of the oldest platforms in the market and has a substantial, or had a substantial revenue base. And we were in the process to acquire the company, but we didn't get to terms. And yeah, it's on the NDA, of course, so I cannot say too much for it. But not every M&A case that you look at in the end works. Some have a too high risk profile. That's basically I think the main reason here. And the company also went into bankruptcy after it. Yeah, nobody bidding more.
So when it comes to acquisition, it would be specifically a DSP that would be of interest to.
Yeah, there's a few
MGI.
areas where we are looking into. It's DSP is super interesting, but also on the supply side, if we find things that are really accretive and add to it, we would be interested, or we are interested. And sometimes also you can buy nice technical companies that have more technical solution.
Well, how about sort of in the first half of the year you conducted or you purchased back some of your own bonds? Is that something we should be on the lookout for going forward this year?
Yeah, we have leverage in the company, and leverage was a lot cheaper when interest rates were not so high. So we're actively managing our leverage and also targeting to bring it further down. And we have bonds. The main bonds that we have maturities in 27 and 26 end of. And we have still 30 million bond outstanding from our 24 bond. And that's something that is maturing in November 24. So that we are not in a hurry. But if we can buy them back for a good price, we would be interested in it. And overall, bring back our debt.
Yeah. So for the final question, what is the outlook for MGI going forward now?
We want to grow and to go forward. I would say one thing that I didn't mention before in the questions, we also are, of course, looking at our cost base. So we just initiated a larger cost-saving program, which was possible because with the M&A that we did, the transaction that we did, we had multiple platforms. We are integrating those platforms. If they're integrated, you get more efficient. We also focused a bit more at certain areas. We're still investing a lot in data, in contextual, in growth. But yeah, watching the cost base, I think, is very important in the situation where we're in at the moment, the economic situation. And yeah, plenty opportunities to grow, and that's what this company stands for.
Yeah, great. Well, thank you so much, Remco, for joining us here today.
Thank you, Anton.
If you want to find out more about MGI, head over to inderes.se or to MGI's homepage. Thank you.